What companies deserve your hard-earned dollar? Which would you want to work for? How can you know if they share your values? Just ask us. Just Capital is a nonprofit that tracks who really means business in supporting workers, customers, communities, the environment, and shareholders. We measure progress, track success, and help them be better. When you see the Just Capital seal, you know what's real, because just business is better business. Visit justcapital.com to learn who makes your dollar count.
Good afternoon. We are doing it live right here in the 4 o'clock hour now, doing more in 2024 now at 4 in the afternoon. Yep, Mottek On Money live on the air right here in 790 KBC, streaming live online worldwide at kbc.com. And your on-demand Mottek On Money podcast at kbc.com, Apple, iTunes, and all your favorite podcast platforms. And yep, of course, we're on the socials too at Frank Mottek on X, formerly known as Twitter and Instagram. Another record-shattering day for the stock market. We see the Dow moving up more than 200 points to a record-high close of 38,333. This is the 6th record close we've seen so far in 2024. The S&P 500 also popping to a new all-time high at the close of 37 points at 4,928. Also its 6th record close of the year. The NASDAQ, well, it gained just about 173 points today, and its highest close since January 3rd of 2022. Stocks are moving higher today. Looks like it's going to be a big week, by the way, with earnings from 5 of the Magnificent Seven, so-called Magnificent Seven tech stocks. Apple, Alphabet, Google, Microsoft, Amazon, Meta will all be highlighting this week with the earnings news. And the big news on Wednesday, the Federal Reserve expected to announce its latest policy decision, and it's widely expected the Fed will leave interest rates unchanged. Investors will also be watching for any comments during Fed Chairman Jerome Powell's news conference on Wednesday following the statement on the economy and decision on interest rates on when the Fed might begin cutting rates, so we'll all be tuned in for that. Big news in China as the real estate meltdown there continues. Shares of China Evergrande were halted after plunging more than 20% early today after a Hong Kong court ruled to liquidate that property developer. That's very big news in China. It comes against the backdrop of a spiraling debt crisis in China. Evergrande, by the way, was once the country's largest property developer, as in the last few years been in part of a big debt crisis in China. We did see our stock market rally today after the Treasury Department says it expects to borrow $760 billion in the first quarter, which happened to be $55 billion lower than previously estimated. Looks like the yield on the 10-year note eased today. Those benchmark bond yields impact fixed-rate mortgage rates. And speaking of that, are they going to be moving up or down this week? Will mortgage rates fall after this week's Fed meeting, the first Fed meeting of the year? I'll talk about real estate and mortgage rates later this hour with Fred Solomon, president of Solomon Financial Mortgage and Realty, and what's really going on with the economy and taxpayer money these days. A new eye-popping report says it appears federal taxpayers are subsidizing state and local government jobs. I'll talk about that with former economic policy advisor under President Trump, Paul WINFREE, now the head of the Economic Policy Innovation Center, also known as EPIC. Well, an epic day on Wall Street today. First on your money, the markets, and the economy. Joining us live now is Gabriel Wisdom, Managing Director at American Money Management, based here in Southern California, and author of Wisdom on Value Investing. Gabriel Wisdom, thank you very much for joining us. January certainly has seen a lot of a string of record highs here, including today. Nice start to the new year. Give us your assessment of this big news here today.
Well, Frank, the January barometer is flashing bright green. It's the seasonal indicator that always suggests whether we're going to have a robust market or a lackluster one, especially the first 5 days of January. But the entire month, when it's strong, and if it ends strong, that's very, very bullish, because it means that pension plans, which get funded toward the end of the year and the beginning of the year, they want to go into equities, into stocks. They're not waiting. They're going in. So that's very bullish. Then we have the gross domestic product numbers. They've been ratcheted up. They got revised upward, and from the previous 2 quarters, and that tells you that it doesn't really take a recession to bring down inflation. If inflation is actually falling, then maybe when Powell's talks from the Federal Reserve on Wednesday, we'll hear a little bit of a pivot on the Fed policy regarding higher for longer.
On the Air Live with Gabriel Wisdom with American Money Management. Certainly an important week as far as the Fed back in the spotlight. We're also watching what's happening on the geopolitical front with the attack that killed 3 U.S. soldiers and injured 34 more in Jordan. We did see the price of oil actually move lower today after it hit a new high for 2024. Gold prices moved up. We see the price of oil right now hovering at about $77 a barrel. So certainly new inflation worries based on that. It was oil, of course, which led the inflation parade following the Russian invasion of Ukraine. What about this higher oil price here, Gabriel? And is that going to upset the Fed's plans to throttle back on rates as oil prices move higher again?
Well, we've been talking about a soft landing. We've been talking about or speculating whether there'll be a hard landing. It appears we're in a no landing scenario, which would be just right for the Federal Reserve. It means if they do take interest rates down, they do so very, very gradually. And I expect on Wednesday, rates in the United States, with the Federal Reserve Bank anyway, will remain unchanged. In the open market, they're stubbornly high, which tells you quite a bit. And with regard to the conflicts, now Iran and President Biden contemplating the administration's next move, it appears that oil and metals were probably a pretty good hedge against some developing or expanding international conflict.
On there live with Gabriel Wisdom with American Money Management, and we're certainly keeping a close watch on that and watching for the latest bulletins. The other big story over the weekend, this Chinese real estate giant Evergrande, which made news several years ago, looks like they've been ordered by a Hong Kong court to liquidate. That's a big property developer in China. What about this, and might this cause some sort of a ripple in the financial markets?
You know, Frank, we're all looking at this because Evergrande is the world's most indebted property company, and now they're in bankruptcy, and this is proceeding through the Chinese courts, which is not so great if you're a Western investor. And a number of banks and Western funds did invest in the Evergrande bonds. HSBC Bank, UBS was a buyer of the so-called Kung Fu bonds, and so there may be a ripple effect from this bankruptcy. Certainly, there's around 1,000 projects across mainland China that are represented by this massive real estate developer that's gone bankrupt in China.
All right, a lot of concerns about commercial real estate still here on this side of the pond, right? Remember last spring, we saw those bank failures partially connected to commercial real estate, and certainly it's still a big issue here with that slow return to the office and a lot of vacancies here, even in downtown Los Angeles, and a lot of turnover in commercial real estate nowadays. What about that here as we move farther into 2024?
Well, you know, Frank, I'm hoping that it won't turn into an outright, real estate recession or depression. We've had a number of those just in the past 20 years. But there's an old adage in our industry, what everybody knows isn't worth knowing. To make any money, you have to figure out what is it that everybody doesn't know. Well, everyone knows that commercial real estate is depressed and going through structural long-term changes. Certainly the top 4 publicly traded real estate investment trusts or REITs are down in price between 40 and 60% over the last 5 years, and that's up against an 84% price gain in the broad stock market over the same time frame. And then you get the double whammy of high interest rates and the structural long-term changes that were catalyzed by the COVID-19 and work-from-home trend. I'd be a cautious investor in the commercial real estate space, but we're hoping for the best, and I assume that the Federal Reserve has a keen eye on this development.
Are we expecting any more bank failures this year?
I am not, and the reason is consolidation. A number of major banks, PNC, for example, is a very large regional bank. They're looking to acquire or be acquired, and most of the small or regional banks are the same mindset. They want to become part of something bigger before there are problems. And then if we hear from Chairman Powell on Wednesday that the interest rate cycle now has reached a peak and they're not interested in raising rates any further, well, then they already start to go down, and that relieves pressure on banks that made the great mistake of buying long-term bonds with excess cash.
All right, look what happened to Bitcoin here. All of a sudden back above 43,000 after cracking below a 40K recently. Got that bounce recently ahead of that Securities and Exchange Commission approval of the Bitcoin ETFs, and then pulled back and now back up again. What about those Bitcoin ETFs and the wild ride? Looks like Bitcoin is doing what Bitcoin does here at this point.
It's remarkable, Frank, because the Bitcoin...
Business has always been about turning a profit, making money. But can it stand for something more? Something beyond dollars and cents? We think so. We think that today, business has a higher calling, a purpose to be fair and just, to do right by their workers, customers, communities, and the environment. And it turns out companies successful doing that also do better for their bottom line. When you see the Just Capital seal, it means this company is a force for good. Visit justcapital.com to learn more.
We're all juggling life, a career, and trying to build a little bit of wealth. The Brown Ambition podcast with host Mandy and Tiffany the Budgetnista can help.
When it comes to financial stuff, gather friends, confidants as you go along who are on the same path as you, because family is amazing, but family doesn't always understand the journey that we're on because they have their separate journeys. So I just feel like the more voices you have, whether it's ours from listening to the podcast, we can be like your big sister friends.
Brown Ambition,
wherever you listen.
Mania, I guess you'd say, sort of coalesced with Sam Bankman-Fried's arrest. And, he was the FTX chief executive officer. He was convicted last November in orchestrating a massive fraud. And then we got this fellow, Changpeng Zhao, co-founder of the rival FTX company Binance. He pleaded guilty to federal money laundering charges, and he stepped down. And maybe two of the biggest players might go to jail. But since the October opening of the Bankman-Fried trial, the price of Bitcoin has only gone up. It's up about 55%. So I don't know. You have to count that as real interest.
Very interesting. And what about the Magnificent Seven? Looks like they'll be taking the spotlight, or most of them will be this week on the earnings front. I mentioned the five of the seven that will be reporting earnings this week, including Apple, by the way. So what do we expect to come out of that? And it should be noted the NASDAQ, not yet in record high territory, but getting closer.
Well, that's right. Microsoft will report earnings tomorrow at the close. And now Microsoft, in terms of the market capitalization, the value of all the outstanding shares, it is now the wealthiest company, the most valuable company in the world by market capitalization. That is now larger than Apple, which had been holding on to that record. But it all has to do with the AI interest, and Microsoft was an early adopter there with their investment in ChatGPT developer OpenAI. But I think we're going to hear a lot about artificial intelligence as the Mag 7 type companies announce earnings. And by the way, Google just released its very powerful Gemini AI model, and in September, Amazon announced a multi-billion-dollar investment in an AI company called Anthropic. I mean, this is all part of the hype and excitement around automation and AI. So I think that's the theme.
All right. What about Apple? Also out with earnings this week.
Well, Apple has been hurt by sluggish iPhone sales in China, and then they had some stock downgrades by major investment firms on fears that the Chinese recession would somehow hurt Apple. But in terms of fundamentals, Apple remains one of the great value stocks because of their cash hoard, because their ability to raise the dividend aggressively, and the the reoccurring cash flow that they get just from owning all this infrastructure that many of us around the world use every single day.
All right, looks like a merger deal involving Amazon has been terminated, and we see the shares of iRobot moving lower today after the company and Amazon terminated their acquisition deal, casting a shadow over the future of the company, of iRobot, that is, best known for the Roomba self-driving vacuum cleaner and those cute little videos with cats and dogs riding that thing around on wooden floors. The company said they're terminating the $1.7 billion deal announced in August because they believe there's no path of regulatory approval of this in the European Union for some reason. So iRobot shares are moving lower, and Amazon stock getting a boost on that. Any reaction to this, and as far as any other M&A activity or pulling the plug of any M&A activity on the horizon?
You know, Frank, oftentimes when a company backs away like Amazon did from iRobot, they come around again. They haven't completely lost interest. I believe it's only temporary. It's the antitrust concerns in the EU for Amazon. They just didn't want to be up against that. But the fact remains that robotic everything is coming, and iRobot, if they can just weather this little downturn, probably be fine. At the Consumer Electronics Show in Las Vegas here recently, they were showing off a pair of robotic shoes. You strap a pair of these moonwalkers on your feet, and you're able to walk up to 250% faster wearing these shoes. I mean, these are the sort of robotics that are coming, and I think a company like iRobot, certainly Amazon, took a very keen interest. They're at the center of these kinds of developments.
Very interesting, and certainly the EVs and that Tesla freeze over there in the Midwest recently with the electric cars stuck there and batteries running on empty as cold weather impacts batteries. As we were reminded again recently, we did see Tesla getting a rebound here today. It looks like the company expects capital spending to exceed $10 billion this year and to range from $8 to $10 billion for each of the following 2 years, according to Tesla's filing today with the Securities and Exchange Commission. And Tesla, which apparently has received some renewed interest from Kathy Wood at that ARK fund, Tesla shares up more than 4%. What about Tesla here?
Well, they've got a bit of a reprieve on their cost to manufacture with the substantial downturn in the price of lithium, which was not that long ago a very tiny ignored commodity that's become, sort of a global spotlight superstar because of its vital role in manufacturing EV batteries. But it's been through a big boom and now a bust that's brought the price of lithium down over 80%. Well, that's great for EV manufacturers like Tesla.
All right. Any specific places where you are putting money now and or taking it off the table?
Well, I mentioned the lithium crash here, and I'm just looking at, though I haven't done anything, but I'm looking at some of the lithium producers because they've gotten a lot cheaper, and the companies that not only are involved in lithium but EV batteries like Johnson Controls, symbol JCI. I'm looking at Piedmont Lithium, symbol PLL, and Albemarle ALB, which is a leader in the lithium extraction or mining area. I'm interested there. And also, remember Alan Greenspan's famous irrational exuberance speech back in 1996, where he said the market had escalated to a point at which it was irrational, and the NASDAQ was at 1,200. Well, now it's over 15,000. I mean, and then he recanted a few years later and said, well, it's not overpriced. NASDAQ was then at 4,000, and now it's over 15,000. And you mentioned that NASDAQ hasn't participated. We've got a massive technology theme here with companies having to automate due to the labor shortages. I like the NASDAQ, the QQQs.
And that's the ETF, right, that tracks the NASDAQ. And certainly Jerome Powell has tried to be more transparent. Remember back during those Alan Greenspan days, I remember joking with Paul Kangas from the Nightly Business Report that we used to understand what he was saying, we'd have to get out our green Spanish dictionary to figure things out back then. The Fed was Fed speak was so confusing under Greenspan. Well, Gabriel, thank you very much for making it clear to us today.
Thank you, Frank.
Absolutely terrific. That is Gabriel Wisdom with American Money Management and author of Wisdom on Value Investing, live with us here on Mottek On Money on 790 KABC. Mottek On Money podcast later on all your favorite podcast platforms. Record-shattering day for the stock market. We see the Dow up more than 200 points today, 224 at the closing bell to 38,333. The S&P 500 of 37 at 4,928. That too a record high close. The NASDAQ up 173 at 15,628, and that's the highest seen since January of 2022. The yield on the 10-year note easing today to 4.07%. Watching the situation unfold in the Middle East, with the oil right now hovering at $77 a barrel. It's been moving higher and actually pulled back a bit today, but moving slightly higher in after-hours trading of 22 cents at $77 a barrel. Gold getting a lift up nearly $5 at $2,030.20 an ounce. Bitcoin has roared back. Right now, $76 at $43,307. Ethereum up 10 at $2,317, and Doge at 8 cents. Mottek On Money continues here in 790 KABC. We're doing it live in the 4 o'clock hour now here in 790 KABC, weekdays at 4, and doing more for you in 2024. What's going on with the economy and taxpayer money? The new eye-popping report says it appears federal taxpayers are subsidizing state and local government jobs. Let's bring in former economic policy advisor under President Trump, Paul WINFREE, now the head of the Economic Policy Innovation Center, also known as EPIC. Paul WINFREE, Happy New Year to you. Thanks for taking the call, and tell us what we need to know about this.
Happy New Year, and thanks for having me on this afternoon. So your listeners probably know that last week the growth numbers came out for 2023. Yep. And what they showed is that about a third of the annualized growth rate that the White House is out there bragging about is driven by federal, state, and local government spending. And most of that's actually driven by state and local spending that goes back to money that states and local governments received back in early and then through the middle of 2022. And what we've seen is that about 22% of the job growth in just last year and about 18% of the job growth since Biden's Build Back Better bill was passed in early 2021 have been driven by state and local government jobs. Now, in a normal, healthy economy, that number is around 8 to 10% of all jobs created are state and local government jobs. So the number that we're seeing that the White House is out there bragging about is about twice as high as it would be under a normal economy.
Mottek On Money continues here in 790 KABC. Good afternoon. We are doing it live here in the 4 o'clock hour. Weekdays at 4, doing more in 2024 on 790 KABC. Streaming live online worldwide at KBC.com and the on-demand Mottek On Money podcast for you at KBC.com, Apple, iTunes, and all your favorite podcast platforms. Did you hear about this? A former IRS contractor who leaked former President Trump's tax records to the New York Times was sentenced today to 5 years behind bars. Charles Littlejohn was also behind the leaks of tax records of billionaire Elon Musk and Jeff Bezos to ProPublica, pleaded guilty back in October to a single count of disclosing tax return information without authorization. The Justice Department called this IRS leak unprecedented in the history of the United States. Littlejohn will face also 36 months of supervised release and must pay $5,000 in fines. Well, it's a big week, as we mentioned at the top of the program here, with a big Fed meeting, the first big Fed meeting of the year coming up this week. On Wednesday, we'll get a decision on interest rates and a statement on the economy from the Federal Reserve, and then a full-blown news conference from Fed Chairman Jerome Powell. What's going to happen with mortgage rates this week following that Fed meeting? Let's bring in Fred Solomon now, president of Solomon Financial Mortgage and Realty. Fred, thank you very much. Happy New Year to you, sir. Great to speak with you. And looks like bond yields, benchmark bond yields came down a bit today, so that's good news. How are the mortgage rates looking here today? First of all,
mortgage rates are up about 0.1% from about 45 days ago when the Fed announced. And hi, Frank.
What companies deserve your hard-earned dollar? Which would you want to work for? How can you know if they share your values? Just ask us. Just Capital is a nonprofit that tracks who really means business in supporting workers, customers, communities, the environment, and shareholders. We measure progress, track success, and help them be better. When you see the Just Capital seal, you know what's real, because just business is better business. Visit justcapital.com to learn who makes your dollar count.
Get an inside look at Hollywood with Michael Rosenbaum.
Let's get inside of Jennifer Love Hewitt.
It's dangerous, I think, to say to women, you can't look like you're not 22 to me anymore because I don't know how to take that. Okay, well, that's your problem because I'm 44. This is what I look like. By the way, she was a looker. Like, congratulations to that 23 or 25.
But I'm a different person now.
You know?
Inside of You with Michael Rosenbaum, wherever you listen.
How are you? Happy New Year. They have increased about 0.1%, and that's only because of the inflation data, and the GDP data was up to 3.3%, up from the previous quarter from 3.1. So with that information, we've seen them tick up a tiny bit, but when we see the yields dropping right before the Fed meeting, that's usually a positive sign that the Fed is going to say something like they said last time, and that is, we're going to be lowering interest rates 3 times in 2024, and this is when we can expect to do it. The first meeting that they were talking about doing it was in March, and that increased with the higher inflation data. Then they're like, oh, well, maybe they won't do it in March. Maybe it will be summer. But whatever it is, they've already opened their mouth and said, we're going to do it 3 times in 2024. So we'll grab our popcorn and listen to the news.
That's right, and it'll be big news when you hear it here on Wednesday, whatever the decision turns out to be. You think there'll be any surprises on Wednesday? You think they'll hold the line, or will they start cutting already on Wednesday?
Well, there's a great website that I can refer everybody to, and it's CMEgroup.com, and it talks about the predictions, and they're predicting 48% chance that they're going to be raising or lowering interest rates on the 18th. So we'll see how that ends up playing out. And but I to be honest, your guess, flip a coin. You got a 50-50 chance.
All right. Well, we certainly have seen home affordability and availability continue to be the big issues here as far as Southern California real estate is concerned, with mortgage rates ticking higher, certainly from where they were at the low point. Affordability continues to be a big issue. How are the home prices looking now here in the Los Angeles area?
Well, Frank, in my office, it has gotten so busy here in the last 30 days. It has gone from crickets to I am just getting incredibly busy. So from my perspective personally, it has dramatically increased. I know from what everybody's talking about, this is simple supply and demand type of economics here that I'm going to explain. But when interest rates come down, we're going to see more buyers. And when we see more buyers and the same level of inventory, at a certain point, people who have been wanting to sell, if the rates come down low enough, then we might see inventory tick up. But at the current inventory levels and with lower interest rates, we are definitely going to see home prices come up this year. And by how much, I don't know. But it's already happening when you get these turnkey properties. I have friends of mine that are getting 20 offers on their properties. So it's a crazy market. It's only going to get worse with lower interest rates.
All right. So historically, is this? I'm glad to hear that business has picked up for you. Is this normally a slow time of the year here, or what are the home buying seasons here in Southern California?
Oh, that's a great question. I always say right after Thanksgiving and right before the Super Bowl. That's typically the slowest time of year for real estate, and it's the best time of year to be writing offers because last time I checked, people are opening up Christmas presents on Christmas Day. They're not shopping for homes. So it's a relatively slow time of the year. When it picks up is during the summertime when the kids are out of school and the parents can move and they're not going to disrupt their school year. So that's when it usually picks up during the summertime. But right now with lower rates, we're seeing that happen right now.
All right. What's new in Southern California real estate? I recently took a drive out to the Inland Empire, heading to San Diego, and did see some new home developments out that way. What are people talking about these days?
Well, everybody that I'm talking to, I'm saying, are you seeing what I'm seeing? Are you seeing more offers? Are you seeing more activity? Everybody's getting busier. So, it's 20% of the realtors doing 80% of the business, and the other 80% of the realtors doing 20% of the business. So 8 out of 10 of them are going to say, oh, it's slow. But the 20%, they're going to tell you it's getting busier, and that's what I'm noticing myself.
All right. And as far as the ability to get a mortgage these days, what does it take, and have those things changed now?
No, it hasn't changed since about 2010, and it should have been this way. The way that things are right now, it should have been like this back in 2003 when everybody was able to qualify for a mortgage by being alive and breathing. But today, you actually have to qualify, and they actually do extensive, Fannie Mae and Freddie Mac lost hundreds of billions of dollars. So they got smarter, and when they got smarter, they put in more regulations. And when they put in more regulations, you either follow the guidelines and accept them, or you don't. And if you don't get a loan. And if you do, then they give you financing. But is it more difficult than 10 years ago? No. But compared to 2009 and to today, there's a huge difference. So, but nothing that you can't, the average person can qualify as long as they have a salary or they have they're self-employed and they show that they make money, adjusted gross income, and they have 2 years of positive adjusted gross income earnings if you're self-employed and if you're salaried. And we look at people's credit reports, and then we look at their salary and we figure out what they can qualify for. And that's what us loan guys do.
All right. And with the Fed expected to lower rates, would you be looking at all at adjustable rates, adjustable mortgages again, or will you stick with the fixed rate here at these levels?
So, yeah, we offer these zero-cost loans, and because of the interest rates, adjustables, the rates on adjustables are higher than, except for some lenders that specialize in adjustables, but the Fannie Mae and Freddie Mac adjustables are typically higher rates than what you get on a fixed rate, believe it or not. They are discouraging you from getting an adjustable. But if you go to a local bank, then they have some special type of programs. But the way I do it is that we do these zero-cost loans. So if the rates drop, you can refi again to the lower rate as long as you wait at least 4 to 6 months, and you can get the current rate without paying any fees to do that. And that's the advantage of getting a fixed rate. But then when the rates come down, you can refi again to the lower rate without any fees. And those, to me, are the smartest loans, and I've been doing that for 20-something years now.
All right. Well, thanks for leaving us with that important information, Fred. It's always great to speak with you. Thanks very much for taking the call here. Look forward to many more conversations here in 2024. Fred Solomon, president of Solomon Financial Mortgage and Realty, based here in Southern California. Have a great evening, Fred, and thank you very much for joining us live here tonight.
Thanks, Frank. You as well.
Coming up, thank you very much. And coming up, it's 790 KBC News Blitz. We're in for a surprise. Randy Wang coming your way next in 790 KBC.
Business has always been about turning a profit, making money. But can it stand for something more? Something beyond dollars and cents? We think so. We think that today, business has a higher calling, a purpose to be fair and just, to do right by their workers, customers, communities, and the environment. And it turns out companies successful doing that also do better for their bottom line. When you see the Just Capital seal, it means this company is a force for good. Visit justcapital.com to learn more.